Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now, and it can also be found on our website at crescat.net. All right. Welcome, everybody, to another episode of Crescat's live market call. I'm live here today, and we have Quinton pre-recorded with a lot of updates on our mining positions. But let's get started talking about the market, because what is going on? We're still near all-time highs for the S&P 500 and the NASDAQ 100, and yet there's a lot of volatility under the hood that is starting to surface, and we'll talk about some of that. So this is a chart from Nomura, and it's looking at the average S&P 500 stocks 1 month absolute move. So that the absolute move, under the hood within the S&P 500, and so the average stock is moving 10.8%. This is over the last 1 month. It's the volatility of the individual stocks is becoming extremely high relative to the overall market, which is still hovering near all-time highs. This is in the 99th percentile over the last 30 years. And if you look at the other times where we've seen these high percentiles of volatility under the hood, it's back in the 2000 tech bubble. It's in the global financial crisis or leading up to it, and it's during the COVID times. But this is at the same levels as leading up to the tech bust in the early 2000s and the GFC in kind of the 07 time frame. So important to take note. Let's look at the next one here. Similarly, I thought this was a great chart from Michael Batnick just yesterday. I think this came out, and he's showing it's a similar thing, but an even more foreboding warning. And now he's looking at this guy's looking at 8-day rolling count of stocks down 7% in the S&P 500, and when you have more than 115 stocks down 7% on a rolling 8-day basis, that's what these red dots are, but we're still near an all-time high. So what happened in all those other red dot situations? Well, on average, you got a 34% average drawdown in the S&P 500 before it was all said and done, before the end of those bear market periods. And we're talking again about the 2001 market meltdown and tech bust that lasted into 2002. You're talking about the 2008 and early 2009 global financial crisis, and you're talking about the the COVID March COVID drawdown. And similarly, that pullback we had was, I think it was more than a 20% pullback or close to it back in April of last year in 2025. This, average drawdown 34% when you start to see these red dots, and yet we're still near the top. There's a lot of risk out there. We've talked about the overvaluation in the market, the bubble in the mega cap tech stocks, and the disruption from the AI. Let's go on to the next. Talk about the disruption from the AI. So software stocks. Now we're looking at the software ETF, the IGV, and it is down over 30%. It's hard to read. I know it's kind of small, but it's down over 30% since its highs in September. And we need to, what's going on? What stocks are these? Well, it's Microsoft. It's the Mag 7 stock. It's Oracle. It's Salesforce. It's all the software stocks. We see Michael Burry talking about Palantir. The AI disruption. We've talked about how, everyone's used AI as an excuse for why to be bullish on the mega cap tech and the Mag 7. But remember, back in the tech bust and the post tech bust, the internet, wasn't, yes, it was a wonderful thing, and it was great for the economy, just like AI will be great for the economy over the long term. But in the short term, there's a lot of disruption. And companies like Facebook and Google didn't even emerge. The big disruptor companies of that era did not even emerge until after the tech bubble burst. So it's the big incumbent companies, the mega cap tech stocks of today, that are the ones that are threatened by AI and by the new companies, whether it's Anthropic or XAI or sorry, OpenAI. These are the new disruptors, right? And it's the Mag 7 that are the ones that are going to be disrupted. And you have NVIDIA. NVIDIA has conquered the world. It's the highest market cap stock in the world. But there are competitors coming after them as well, like Cerebras. We've talked about that before, and their deal with OpenAI. So there's the market is still near an all-time high. There's a lot of risk out there. It's what's going on under the hood is foretelling, I believe, for a lot more damage in the S&P 500 and the NASDAQ 100 still to come. Let's go on to the next. So AI-related debt issuance. So we saw Google issued a huge new debt offering, like $100 billion in debt. Including 100-year bonds, but there's been a surge of AI-related debt issuances in recent months. And the capital spending. The problem with the AI boom is that the CapEx spending is unsustainable, and it, by definition, is going to lead to unprofitability for all the companies that are doing the spending, the aggressive spending, the hyperscalers. And that's not just bad for the hyperscalers themselves. It's bad to the vendors, to the hyperscalers, the NVIDIAs of the world. Yes, it's been great for them, but look back at other cycles. The equities peak before the CapEx peaks. We have record CapEx expansion going on among the hyperscalers now, budgeted for 2026. Bloomberg broke a great story about that last week or earlier this week, and it's accelerating even more. But these are the unsustainable levels of acceleration that create the bust. Why? Because CapEx, it feeds into negative free cash flow. It hurts your free cash flow. And the free cash flow of these Mag 7 stocks has been phenomenal. But it is coming under pressure big time because of the unsustainable CapEx spending. That feeds back to the vendors, to the NVIDIAs of the world, just like it did in the tech bubble of 2000. So we got to be careful out there and it feeds through to the whole rest of the large cap equity market. Let's go on to the next. And this is just Michael Burry's comment about Google's debt issuance recently. Alphabet's debt issuance. They issued a 100-year bond, and he said the last time this happened, where a corporate issued a 100-year bond, was Motorola in 1997. And he compares it to Nokia, how then Nokia came along and overtook Motorola, and that was when Motorola peaked. Motorola at that time was a top 25 market cap company, a top 25 revenue company. Never again after that. I mean, that's the hubris at the peak. Issuing a 100-year bond, smart thing to do. Don't have to pay it back for 100 years, but not a great not a great timing signal, not a great deal for investors. And a lot of people also, I think Motorola was a cell phone company. The comparison to Nokia here. No, Motorola was a semiconductor company. Motorola was one of the leading semiconductor companies in the world at that time. And also important to note in comparisons to NVIDIA today. Let's go on to the next. So we've talked about the great rotation, the rotation out of the overvalued mega cap tech, S&P 500 into undervalued commodities and natural resource related equities, and out of the dollar into foreign domiciled companies, into smaller cap. But what this is showing here is that the rotation is happening. If you just look at the S&P sectors and the PE change. The PE change since last quarter's earnings have come out, and the PE change relative to the 5-year average. Look at what's going on. Multiples are coming up in energy, industrials, consumer staples, and materials, at the same time as multiples are coming down in information technology and consumer discretionary. So there is a rotation going on. And look at that money coming out of the software sector, but the S&P is still at all-time highs. There is risk of contagion to the entire large cap equity market. There is an index fund bubble too. We think the rotation will continue and will be more into the commodity related sectors, the natural resource equities, and out of the U.S. dollar and into foreign assets. There will be some U.S. dollar denominated companies that will continue to do well as part of this rotation, and we like energy, we like industrials, and those are certainly two of the areas that we favor right now in the U.S. along with materials, of course. So let's go on to the next. What else is going on? So today's CPI came out, and headline CPI was slightly less than expected. There's some stuff under the hood that may not be sustainable on that front, like gasoline prices, for instance, and rents, which are a very lagging indicator and are finally showing up in the owner's equivalent rent data. But we have, what's the market doing? It's getting excited that maybe we can price in another rate cut for 2026, and so now there's a more than 50% probability of another rate cut this year getting priced into the Fed funds futures curve. As you can see, the curve is coming down, change in basis points across the curve over across the Fed funds futures curve over 1 day, 1 week, 2 weeks, 1 month, etc. And now there's basically 2.5 rate cuts priced in. So people are taking that as bullish, glass half full, glass half empty. Market's up a little bit today because the Fed's going to cut rates. But what's it really bullish for? Much more bullish for the great rotation in terms of the material sectors, the natural resource sectors, the energy, the metals and mining stocks, and this is still where we want to be on the long side. Let's go on to the next. So Tectonic, I have to talk about Tectonic because they just put out all the rest of their holes, finished their drill season. This is Crescat's second or third largest position across our funds, across the firm. And we made sure that we got them the money early in the season last year, so that they could have a full drill season. And boy, did they ever have a full drill season. And I know Quinton's talked about some of the updates here recently, but I wanted to highlight that that over the entire 2025 drill season, Tectonic had over 15 drill holes, or had 15 drill holes with over 100 gram meter gold intercepts. What does that mean? This is the Newmont criteria for a discovery hole, and they had over 15 discovery holes this year. Why were we excited? Why was Quinton so excited about getting money to Tectonic so they could drill their flat gold project? Well, because we had a theory, we believed, Quinton's theory, that this was another big reduced intrusive gold system, like a Snowline, like a Osisko, like a Fort Knox, and that it was a big target. It was a huge target. And now there had been some drilling, some historic drilling back in the 1980s here. That's what got Quinton excited when Kevin Box, his geologic mapper, put all those drill holes into Leapfrog, and back then in the 1980s, there were two discovery holes over 100 gram meters that Robert Friedland and his crew discovered. For Robert Friedland at that time, I think this was in the early mid 80s. I'm not sure the exact time. It was in the 80s sometime. Gold prices have been coming down, and they pivoted to Fort Knox, which was a similar type of intrusive system in Alaska, closer to Fairbanks, where there was more infrastructure, and ended up drilling out and ultimately developing that project. And Fort Knox is like a 7 million ounce gold system. But the great thing about Tectonic is it's a bigger footprint. It's a much bigger set of targets, these magmatic intrusions, and there's over 12 kilometers of strike length in total that they have from the south to the north, but there's over 3 kilometers of strike length now in this Chicken Mountain to Alpha Bowl section that we're showing here in this chart. That's where they had the 15 discovery holes this year over 100 gram meters. In 2024, we've had money here too, but it was just shallow RC drilling, good grades, but the holes weren't deep enough to show these big Newmont style discovery holes. This is a tier 1 deposit in the making. I personally think this could be one of the biggest gold discoveries in the U.S. That ultimately this could prove to be one of the biggest gold mines in the U.S. And guess what? It's only 25 miles from Donlin Creek. What's Donlin Creek? Well, that's a 35 million ounce gold deposit that is now on the Trump fast track to get developed. They have a deal now to build a natural gas pipeline that'll come into Anchorage through LNG, and then a pipeline out to southwest Alaska, where Donlin Creek is. In this higher gold price environment now, even Donlin Creek is becoming a viable project, and billionaires Tom Kaplan and John Paulson have put up the money to advance this project and get it into development and into production. Why does this matter to us? Well, because we can piggyback. Tectonic can piggyback on all of that infrastructure that's going in, but it's, in my opinion, it is going to be a much more highly economic project, probably at least as big as Donlin Creek in the end. But Donlin Creek is a refractory style gold system, whereas Tectonic is a reduced intrusion style gold system that has very high recoveries. So all of the metallurgy work that they've done to date is showing very, very high recoveries. Why is that different from Donlin Creek and its refractory deposit? Refractory deposits are low recovery type deposits where it takes a lot of energy and it takes a lot of capex in order to liberate the gold from the rock, and that's why that's why Quinton so loves these intrusive style gold systems, this is like a Fort Knox, but we think better grade, showing better grade so far, and a much bigger footprint. So this has just been a bang up year, and the company just raised a ton of money. It's going to be they're going to be able to go probably twice as big, if not more, as they did last year in drilling. And I'm just so excited about this company. I have to talk about it. So anyway, let's continue on to the next. Okay, now this was in our letter that we just put out a couple weeks ago, but I have to go over it again because this chart here is looking at a couple of things. Number one, it's looking at the long-term US dollar cycle and this potential third wave that we have for a devaluation of the dollar. And it's looking at through the lens of the gold to S&P 500 ratio. And what is this showing? Well, it's showing that the two prior waves of dollar devaluation were during the Great Depression, when FDR confiscated gold from the American public and then proceeded to revalue the dollar relative to gold, to devalue the dollar, and that was the inflation that happened in the middle of the Great Depression and the first big dollar devaluation wave. So looking at it relative to the S&P 500 is important today because we're at record valuations for the S&P 500, just like we were in 1929, just like we were in the early 1970s, and just like we were in 2000. And so we have this combination effect of a stock market that is ripe for a big correction, at the same time as we have these record debts and deficits that essentially the only way out is interest rate repression, inflation, and so the relative performance of gold to the S&P 500 is important to look at. It's how we're positioned across the firm, especially in our global macro and long short strategies. Our macro and our long short funds are positioned long gold, long silver, long precious metals miners, long resource equities, and short the S&P 500, the Nasdaq 100, the Mag 7, how can that trade work? Well, look at how that trade worked by looking at gold relative to the S&P 500 in these other two big time periods: the decade of the 1970s, which was the second big dollar devaluation when we went off the Bretton Woods fixed exchange rate system, when we went off the gold standard, when when Nixon closed the gold window. We had a decade where gold went from 35 to 800. Okay, I think something similar can happen in the years ahead here, the immediate years ahead. And we've only seen the beginning of where gold can go, at the same time as we're at a record valuation top for the S&P and the Nasdaq 100. And there's a lot of downside risk. This is this is also a depiction of the great rotation trade, where you want to be long, where you want to be short, We want to capture both sides of that in our global macro and our long short fund, and that's what I'm determined to do. Let's keep going here. Now, I showed this one 2 weeks ago. It's also in our letter. We updated it a bit from what I showed 2 weeks ago, but what it's showing is that there's already been, since Trump came into office more than a year ago, there's already been about a 10% devaluation in the trade-weighted dollar. But there's one currency, one big trading partner currency that is yet to devalue in a significant way, and that's the Japanese yen. Okay, now a lot of you've heard about the yen carry trade and potential unwinding of the yen carry trade. What does that mean? Well, the yen has been a funding currency, a borrowing currency, and because the low interest rates there, but interest rates are coming up in Japan. Japan has inflation. Yes, Japan has a fiscal debt imbalance that's even worse than the U.S. But there is a Mar-a-Lago Accord. There is a trade deal between the U.S. and Japan, and as part of that trade deal right now, we think there is a coordinated effort to appreciate the yen, and we've seen it start to happen recently, and we think there's another 10% kind of move still coming for the yen to catch up to the rest of the currencies that have been appreciating relative to the dollar. Trump administration wants to onshore manufacturing, fix the current account problem, and improve national security, defense, and reduce our reliance on the Chinese supply chain. So the goal is to boost U.S. exports, and the methods include tariffs and trade deals. And there is a major trade deal with Japan right now. I think you're going to be seeing a lot more news on that trade deal in the weeks ahead, and including some news that's going to benefit some of our companies in our portfolio tremendously. But the risk is that if you look at the turquoise line here, look at how since Nixon took us off the gold standard, ended the Bretton Woods fixed exchange rate regime, we have seen this period of the dollar still being the world reserve currency, but our trade deficits expanding over this entire time period. What's the other side of the current account of the trade deficit? Essentially, it's the capital flows, it's the capital account and the capital inflows, and we've had record foreign capital inflows into U.S. equities as part of what has created the bubble in stocks today. 29% of U.S. stock ownership is rest of the world. So if we have the risk not only of this great rotation of U.S. money leaving the dollar and coming out of the record overvalued S&P 500, we also have the foreign repatriation risk. And this is one of the potential unintended consequences of this Mar-a-Lago Accord and the trade deals and the trade rebalancing and the deliberate coordinated effort to devalue the dollar relative to our foreign trading partners, at the same time as there's pressure to lower interest rates. It's the most incredible environment for hard assets that I've ever seen. We've been anticipating and positioning for this for years. I think it's only in the very early innings. Let's go on to the next. And so we talk about foreign repatriation risk, but there's also the domestic overcrowding into U.S. equities that is also responsible for creating the record bubble and valuations that we have in the index funds, in the Mag 7. And so now we're looking at the share of, we're looking at stocks as a share of financial assets among U.S. households and nonprofits. So this is the Federal Reserve data. and it shows that, again, since the 1970s, we have just been going up in terms of how concentrated U.S. financial asset portfolios are in U.S. equities. Again, creating this record bubble that we have in valuations comparable to 1929, comparable to the 2000 tech bubble, and downside risk. So how does its downside risk materialize? Well, it materializes from the Great Rotation, from the rotation out of these overcrowded assets, where there's foreign capital crowding into U.S. stocks, whether it's U.S. capital crowding into U.S. large cap stocks. This is the risk. It's imbalanced. Let's keep going here. So we are going to have Quinton in a few minutes here, but I just wanted to highlight that Crescat did finish 2025. Now there's 2,900 funds that have reported their full year 2025. Crescat finished 2025 now with 5 of the top 19 funds among all 2,900 hedge funds globally that have reported in the Preqin database. The big driver of our performance last year, of course, was our activist metals portfolio, which is the biggest long theme in our long short and our macro funds. It's also almost entirely what the precious metals and the institutional commodity fund are built around. So that was the attribution last year. This year, I think, is going to be much more about both, a continuation. Certainly, I think we can have I personally think we can have even bigger returns this year in our activist metals long side of the portfolio. But this is the year, I believe, where we really show that we can capitalize on the short side. And those who followed us for a long time know that I'm not afraid to short. And our global macro fund has a 20-year track record right now among all discretionary macro funds that has the best downside capture ratio of all macro funds over the last 20 years. It also has the best absolute return over the last 20 years, and that includes funds like Bridgewater Pure Alpha. So at a record high, and for the overall market, we're still near those highs. What does it matter that you have a low downside capture ratio, even a negative downside capture? It matters a lot, because we're not afraid to short. We've been short, and we've always had a short component in our global macro and our long short funds, but it's held us back in this record bull market. Now I think it's getting ready we are getting ready to be unleashed, and I think you're going to see some of the best returns that we've ever had in those funds, and a continuation of what we saw last year. But not only because we can have the long side working in the natural resource equities, the precious metals, but we can have the short side kicking in at the same time. That's certainly the goal. Let's go on to the next. So how did we do in January of this year? We're continuing the strong performance, and we again, we had 5 of the top 18 hedge funds for January 2026. I don't think it's over. I don't think it's over at all. I think it's only the early innings, for all the reasons that we showed, especially that gold to S&P 500 chart. Go study that, and I think that's all that I have. So we're gonna flip it over to Quinton for some updates on our activist metals portfolio.
Hello, folks. Here we are, Friday the 13th, and I'm all set to give some very important updates. It's really interesting to watch the silver market these days. It's almost like we had an earthquake and there's aftershocks afterwards. These rapid pullbacks in price. But I guess, in my view, the resounding support that silver's seen over the past couple of weeks since the big fall, what was it, early February, I think, is actually quite remarkable. I can't think of too many times where I've seen, at least in my lifetime, seeing that kind of support, that bounce back, and there seems to just be a persistent, um, buying support there. We're in price discovery phase, guys. Everybody knows that. As soon as it broke out of the previous all-time high, which was just around $50 or so, call it, silver's been trying to find its new home, and quite frankly, in my view, building a steady base and then rising from there is always better than seeing these asymptotic increases in price. You almost always see a pullback with those. So, I think we're in a good position here. I'm feeling pretty good about things. Other metals are moving. We're starting to see, copper's been up for the year, but zinc is also moving now. And quite frankly, mining is in vogue. We're seeing a lot of capital starting to return to the space. Are we at the top of a bull market? No, absolutely not. This is early innings. We've really only seen capital and the interest in mining show up just in the past, few months, really, call it. So, how could you say this is we're at the peak of a bull? That doesn't make any sense whatsoever. Okay. But I think one of the things that I'm seeing is, an increasing flow of money into exploration companies, which is good. It's encouraging to see, and I'm going to talk about a few stories today. These companies need money to do their work and, quite frankly, get back to work in some cases. One of the companies I mentioned maybe a month or two ago, BCM Resources, one of my favorite companies. They have a discovery. They have a bona fide discovery underneath the pediment out here in southwest Utah, Thompson Knolls. Look, Thompson Knoll is basically a buried porphyry skarn system that was discovered through a combination of geophysical work and really a lot of very good scientific work done by Sergey and other folks, including folks out of the Colorado School of Mines. And at this point, the company needs to get back to drilling and chasing down the vector, basically the follow-up work that's needed to follow up on the discovery that they made and announced in I think May 2023, I think it was. So here we are, over 2 years later, but they're going to get back to work. In fact, I caught this photograph of Sergey riding his horse across the desert out there. He's back in the saddle. Okay, we made sure Sergey has some cash in the bank and he can get his drills out there and start drilling again. And yes, we did. We being a pool of very close supporters of Sergey and BCM pulled our resources together and have basically helped them finance the company so they can get back to work. And that's great. We're going to see an exciting story develop as they drill this year. Let's go to the next slide. Okay, Eloro announced some interesting news. They basically have been accepted into what's called the U.S. Defense Industrial Base Consortium. And this is an interesting endeavor. This is basically by the U.S. government, and it's a focus on, rebuilding supplies of critical minerals, critical metals. And in this case, the U.S. and look, I just came back from Bolivia. I met with people in the government down there. I've talked with folks out of the Trump administration, and I've talked to many folks. We as San Cristobal are operating there in Bolivia, and Eloro, of course, is not too far away. They're about 125 kilometers, I think, to the east of us. But this is a big project. It could be a very important source of base metals, silver, tin. So we're looking at a very important project that needs to be developed. And what I've been told is that the U.S., while the U.S. is basically focused on a new doctrine, we'll call it a rebirth of the Monroe Doctrine, call it, the real important targets that the U.S. has in terms of new metal development, like new mining development, is Chile and Bolivia. Okay. Yes, they're also keen on Peru and other countries in Latin America, but they want to see Chile and Bolivia, which have basically both seen some substantial political change, come back to the fore. They want to see them rebuild the mining industry, and it's great to see Eloro as part of that. We're also working on a number of endeavors. When I say we, San Cristobal's working on a number of endeavors in Bolivia as well, right now. So we're going to do big things in Bolivia. All right, let's go to the next slide. All right, one of the favorite things I like in the exploration world is a pure greenfield discovery. And this news really slipped by. It even slipped by me. I was flying on a plane back from Bolivia, and I landed in Houston, and somebody alerted me to the fact that a news release had been put out on February 1st, or excuse me, February 11th, about Harvest Gold intersecting a narrow but high grade interval, 105 grams per ton over 1.15 meter. And this is at their Musou property. This is basically part of this greater windfall package of or terrain, greenstone belt that has seen grossly underexplored terrain that's seen the emergence of significant discovery here recently. I'll show you a slide in a minute, but look, the fact that they picked up this property, about 2 years ago, and they've now advanced the technical work and gone out and done a first pass, albeit very broadly spaced drill program, and they've jagged 1.15 meter of a 105 gram per ton. Look, a drill hole is that big around, okay? And when you're talking about a piece of ground that's, many, many square kilometers in size, you think about the odds of hitting something like that on your first go around. It's kind of like slightly better than if you'd never been born at all. Okay. So when I see a discovery hole like this, I call it a discovery hole. It's like, that's like a 120 gram meter hole already. First pass drill program. Yeah, it's narrow, but you know what? It could be a fluke, could be, but my gut says that they basically told the world that they've already, this property already generates high grade. Okay. So in my book, this is one to pay attention to. I got very excited when I saw it. Let's go to the next slide. Here you can see their land position in this urban berry slash, I'm going to call it the windfall terrain. This is basically a east-west trending greenstone belt. All of those purple blocks that you see there, that's goldfields. Okay. Goldfields picked up the Osisko ground in the wind east of in this image. But these guys have really taken a commanding position here in this urban berry belt in the two green blobs that you see there. And the Musou is that left-hand most blob. So they've made this discovery right there. Okay. What do I like about this? Greenfields. Okay, great. They have great big property position. That's fantastic. They are right next to a major mining company that, quite frankly, is going to be a natural suitor for them to buy them. If they make a discovery, this thing's written in stone. Okay, this is really, really cool. All right, go to the next slide. Here you can see some of the magnetics that they've collected over the property. Very well-defined greenstone belts. The magnetic response there, those linears are basically showing us the magnetic response of the underlying metamorphosed volcanic rocks. And there are some very discernible, zones, we'll call it shear zones, or likely areas where there's shear zones that are showing up. And that one they've highlighted right there in the middle with a little bit thicker black outline. That is where they did this first pass target. Okay, so the one hole that hits the high grade is actually towards the middle. I'll show you in the next slide where it's at. But you can see here that they have a broad belt. And really importantly, many of the other early stage holes that they've drilled here also hit gold, not high grade, but they hit significant runs, multiple meter runs of, say, 0.x gram gold. For a first pass program in a just pure greenfield area like this, this is a great success. Go to the next slide. Let's look at the high grade result. So we're kind of zooming in here a bit, and you can see they show that what they call the Kiosk River deformation zone. So that gray area going across here, that's their interpreted region of shearing. And lo and behold, that high grade interval they have is actually highlighted there. It's MO 25-25. So it's the left-hand most of the three drill holes that they drilled there. And they hit 105 gram per ton over 1.15 meters. And yes, look, there's other intervals there. Like I said, look at the other drill holes. They've hit gold in many of the drill holes here. And quite frankly, this is no accident. Okay, there's something more going on. Does this justify more work? Absolutely. Look at the scale bar down there in the lower left. We're talking, that little bar there's a half kilometer. So you can imagine the scale of what they have here. Very, very large area. And again, to jag, one high grade intercept usually is we'll say a warm up back to something bigger and better. Let's hope. No guarantees, but I think there's a lot to be explored here. Notice that red box there was some work done. This is 2017. It looks like they had 2.93 gram over 5 meters. It's not too far away from this high grade, but it is a ways. It's probably 100 meters or so to the south. But they at least had some evidence that there was gold here. But this now gives them confirmation the high grade is present. And that's what, by the way, they found over at Windfall to the east. So I think this greenstone belt, every bit as prospective as a Windfall terrain. And now we can see it generates high-grade gold. It's going to be a lot of work to advance this. But, early success like this is what drives further exploration and attracts money. So good luck to them. This is a great story. Let's go to the next slide. Okay, Alpha has not had a lot of news lately, but they did put out a pretty big batch of drill holes from their second batch from the 2025 drill season, and included in that is 10 meters of 3.12 gram per ton gold. Okay, now they are drilling pretty systematically at this point, and John Wilton, the new CEO there, I've known John for quite some time, very sharp individual, doing very careful work. Let's go to the next slide. And what we should expect to see from the company is a continuation of very systematic work that starts to put this picture together. In this particular image, you can see where that higher grade interval is on the right-hand hole there. Look, there's a lot more to be tested here. This terrain is basically a very, very large greenstone belt in Eritrea, and it needs more work. The guys, I don't know when they plan to put a resource out, but they are doing the work that's necessary to build a resource, and that's good in my book. I think this is a very good story. I think again, the geology of this reminds me of a lot of the gold projects across the this Nubian belt, which is a piece of old crust that's been pulled apart across the Red Sea. So basically, some is in Africa, some is over in Saudi Arabia, but it reminds me a lot of some of the deposits like Sukari up in Egypt. So let's keep our eye on this one. Let's go to the next slide. Okay, Kingfisher. Look, this stock has seen a big lift here recently, and the lift really started when this drill hole was announced. This was actually a little while back, and I apologize for not speaking about it on the last video. I had very little time to prepare for the last video, so I kept it very short. This time, I'm taking a little bit more time and trying to catch some of the stories that I've missed here recently. But on January 22nd, the company announced that they discovered a blind copper gold porphyry at Hank, which is one of the targets at their Highway 37 project in the Golden Triangle. Again, this is relatively easier access than most of the Golden Triangle, so that's a strong attribute of this project and the company. But the fact that they hit a very long run, 425 meters here of 0.4% copper equivalent in this early stage hole is very interesting. It got the market excited. Most of the technical people, I'm going to say the people that know what this company is looking for and know what a big porphyry discovery, an alkaline porphyry discovery could mean, they really woke up and paid attention. I've seen a lot of technical folks pick up on this, and quite frankly, you're seeing a lot of funds and stuff jump in here, and the company did raise a big whack of money here recently to help them do their work this coming summer. So, and it's on the back of this news. Let's talk a little bit about this story because it's quite exciting. Go to the next slide. Here you can see some images that outline the drill hole that they had up there in the upper left. You can see they had a pretty big run. There's some higher grade intervals in that, by the way, but a very big run, 425 meters of 0.4% copper equivalent. Is that, Is that the high grade? No, but look at what's immediately to the east. Okay. In this case, we're looking northward. To the east, they interpret a porphyry target. So they think they basically glanced along the margin of it. It's based on the alteration they've seen, but also this geophysics. So over here, and note that up at the top there's some gold, epithermal gold, which is often characteristic of the upper part of a porphyry system. But if you look at the geophysics they did over here, which shows down to depths of a few hundred meters, shows a chargeability up something there. There's a very easily discernible discrete target here. Okay, and did the company test it? No, they were kind of on the edge of it. I don't know exactly what their drill situation was last year, but they left the better part of this untested. I think the data came in a little bit after the drill hole was done. But man, is that a juicy target. That looks really, really, really good. Okay, so down there in the bottom, you can see a little bit better. That's a 3D rendition of the target. So it shows you in 3D space where the target is. It shows you where that drill hole was. And it also shows you where the Williams part of this system is. The Williams, it's the Hank Williams target area. And it's a little bit more, I think, to the west in this case. But they've already found a pretty sizable body of copper gold mineralization there. Maybe this one under the Hank area that they kind of glanced along or tagged with this first hole, maybe this is the big prize. And there's a lot of people in the market who are betting just that. So good to see the company really make a discovery that could be significant. It could be a very important story to watch this summer, and we'll be anxious to see them get back to work. All right, let's go to the next slide. All right, Snowline. Talked to Scott Birdall this week. Always happy to catch up with Scott. He's doing a great job. Everybody I talk to just gives him high marks on everything they're doing. Built a great technical team, and they have capacity to advance Valley to production. Okay, they are young guys, but they're full of vim and vigor, and they want to make this a mine. Okay, and this news that came out here was really largely driven around this geotechnical drilling, which included a hole up on the northwest end. This is an end of the deposit that I felt still had a bit of openness, and lo and behold, it proved true. Okay, so they hit 347 meters of 1 gram per ton. And much of that, the bottom part of that, is outside of the current resource and outside of the current pit. So it does look like there's some blue sky out there. They also talked about some discoveries at Crossroad. I think they're starting to see a picture of, a target develop there, targets develop there that they're eager to follow up on. And Scott was quite excited about that. We also talked about drilling that they might do at Gracie as well. I think they've got some very clear views on where the mothership might be at Gracie this coming season. That is in addition to all the technical work they're doing to advance this project forward. Of course, their target is to get a PFS out, I think, mid-year-ish, something like that. It'll be very interesting to see, because I think with the current gold price and the current trend of the mining space, this is still the best gold deposit out there that's not been acquired. So, no brainer in my view. But anyway, let's go to the next slide. And here you can see the drill holes that they announced in this news release. See, there's one, there's 79 meters of 2 grams there towards the bottom center. Pretty typical numbers. 128 meters, 1.58 grams. Yep, typical of the core part of the valley deposit. But it's that one up in the left-hand side. So center left, 347.6 meters of a gram. That one's quite interesting, because notice how that kind of pushes the envelope out in that northwesterly direction. I think that's important. Does it make a significant difference? Yeah, it'll probably add some ounces. It definitely. Okay. Now over here on the east side, they did hit a lot of low grade. There was a lot of news around the gold that they encountered. They could see visible gold in some of the veining over there. Not quite as high grade, but they did hit some long runs, 147 meters of 0.47 gram, for example, over here in the east. Are they done there? No. If you look at that in 3D in space, there's a lot of room for exploration. There's certainly room underneath those drill holes. Might be that there's something actually tucked right underneath the drill holes. If you think they go off over the top of something, poke a hole down below and see if it's there. Okay, so I'm still quite anxious to see what might be in the eastern zone. Certainly, there's enough scale or scope to that area that there's something going on that needs further drilling. All right, let's go to the next slide. Eskay. So Eskay is back in the saddle with a team, a full-time team here. They've hired Clinton Smythe, who's basically a geologist, a little older than I am, but he has a lot of similar experience to me. And interestingly, in a particular space of bleg sampling, he worked with Normandy Mining back in the 19. And when he saw the bleg results that we had down about coming to work for Eskay, how to follow up on bleg, and very eager to work with disclosure and with Clinton, who's very well seasoned professional. I think we're gonna figure out what's driving that gold anomalism down there this year. Let's go to the next slide. And again, disclosure, I'm a director of Novo, but this news that came out this week, quite exciting in my view. It outlines the target size of the bell topper system, and that's based on the drilling that we've done over the past couple of years and the interpretation of the structures and scale and scope of these structures, like how much length they have, width, depth, potential, and stuff like this. Quite frankly, we hired somebody to do an independent review of all of this data that we've generated. Just tell us what might be possible here. And you can see down there at the bottom, we might have a 2 to 3 million ton range, but pretty good grades. Okay, 6.7 to nearly 9 grams per ton. What does that mean? We probably have a target here that could be up to 1 million ounces in size already in sight. Doesn't mean that's all there is, no, but it gives us a very clear picture that there is a target worth chasing here in terms of, a new, exciting, we call it epizonal, high level, high grade gold system in Victoria State. Don't forget, Fosterville's not too far away from us. Might they need more ore at some point? Sure. Might there be more exploration that could be done here? Absolutely. This is just a start, but it's an exciting position to be in, and allows us to follow up on growing this story. All right, let's go to the next slide. Now I'm going to talk briefly about two of our, we'll call it right-hand stories. Osisko development, is on the right hand of the Lassonde curve. Osisko is basically now building the mine, the project at Caribou up in BC. And there's been a couple of news releases come out of the company here recently that I think are important. Firstly, they've hired JDS, my good friend Jeff Stibbard at JDS to basically oversee the build of this mine. And I think that's a great milestone, great accomplishment. And I feel very confident that the company can now advance this project forward to its completion. Okay, so that's the first piece of very, very good news that I see. It's really a kind of a critical piece to make sure the project gets built in a timely fashion. But at the same time, my good friend Chris Lauder, who's in charge of exploration there, is spinning the drill around and doing a lot of drilling. Right now, they're drilling underground to basically infill and assess a lot of the areas they plan to mine. And like always, they hit some very high grades. You can see, 596 gram per ton over 2 meters. Yes, there are places here which are extremely high grades. Now those, I've shown pictures of the veins there. They're kind of irregular, but they follow corridors, and they're like poker chips. You have multiple corridors, set right beside each other. Okay, it's not to say that the overall grade of the deposit is going to be this, but there are certainly high grade within those corridors. And as a bulk underground mineable system, this is really showing a lot of promise. One other thing I'll point out, the company did raise some other monies in the not too distant past that allow them to explore the strike extent of the Caribou system. And they're actually going to be doing some drilling away from the focused mine area here, because I want to show that there is potential for multiples in scale of gold at the Caribou camp. I have very little doubt that this deposit, this system, could be a very big one, probably one of the biggest in Canada. All right, so I think it could be a 10 or tens of millions of ounces gold system at some point in the future. All right, go to the next slide, please. All right, another right-hand story here. Newfound Gold. Look, I've seen Keith at a couple of shows here recently. I've caught up with him, and seeing the news flow coming out of the company is quite exciting because they are doing the work that tells me they are focused like a laser on building this mine. Okay, and if you think back about a year ago, they started to hire the people they needed. Paul Hewitt came in as chairman, and he hired Keith and others under Keith to work on all aspects of mine construction here. And now the news flow out of the company is very much the right hand side of the news flow. But we're starting to see a story that's really taken shape. They got technical reporting coming out of a lot of the work they're doing, but they're doing the environmental assessment work, the mill selection site, the site selection. They've basically contracted or put together the EPCM, or they will contract the EPCM, basically the scope of the engineering, procurement, et cetera, for the mine here in the not too distant future. And then down there at the bottom, you can see the timeline. Okay, they have a very clear goal of when this thing can be in production. We're talking 2027. We're not talking 2037. We're talking in a couple of years. So you want to talk about a right-hand story that could see a great lift over the next couple of years. This is it. Okay, this is really they're doing well. All right, so kudos to him. And Eric Sprott, yes, he's stuck with this. This is one of his highest conviction stories, and the team is there to do the work. All right, let's go to the next slide. This is a picture of other news that came out from Newfound Gold. They have been doing a lot of surface work, sampling, and demonstrating very good continuity of the high grade. That's one of the biggest question marks around the whole system is, how continuous, how consistent is the high grade? And you can see here that they continue to just generate phenomenal results all up and down the property. Okay, but more importantly, you can see they can pull pits on all of this. These pits are actually quite shallow, 100, 200 meters deep. Is there more to this system? Absolutely. Okay, the roughly 2 million ounces that is officially there right now, is that going to grow? Absolutely. When I worked with Kirkland at Fosterville, we saw nothing but upside in a system like this. So I think this one's going to demonstrate similar results. We'll say it'll overachieve. That's my gut. Okay, go to the next slide. Okay, the last slide for today. I've mentioned a few times here recently that we have a silver story that we've worked on over the past few years. In fact, we picked up our first investment in this company in 2020, I think it is. I am a director of the company. It's been private. Okay, it's taken a lot of work to clean up the company, just from land aspects, legal aspects. There was a lot of hair on this puppy when we picked it up, but I hired the right guy. Anybody that knows Travis knows he can absolutely kick butt and get stuff done. Okay, he is the kind of guy that gets her done, and he has taken this company forward. And you will soon see a brand new silver story out in the market here that is phenomenal. Is it really a secret, silver squirrel like St. Cristobal? Not quite. A lot of people know about it, but I think it's going to be an excellent story in this market. Okay, and it's coming forward very, very quickly. So stay tuned. All right, guys, that's it for today. Thank you.
All right, thank you, Quinton. So some nice updates. The new secret silver squirrel, I believe it's going to be coming out here pretty soon. So stay tuned. Again, we're just showing the performance of the Crescat funds here. We're off to a good start year to date. I think the train is only just leaving the station here. There's a lot more to go in this cycle for precious metals, in this great rotation, in the downside where we are short in our macro and long short funds, in the this overvalued S&P and NASDAQ 100 Mag 7 mega cap tech bubble. Anyway, let's can we show the slide with Merrick's information? There we go. If you're interested in learning more about Crescat's investment strategies, we encourage you to reach out to Merrick. His contact information is on the screen right now. Give him a call, shoot him an email. I think it's early in the cycle for the great rotation here, folks. There's a lot more to play out. It should be some very exciting times in the months ahead. We look forward to seeing you again in 2 weeks. Until then, enjoy these markets. Fun times.